assume this is your paper, you are going to answer this question. What should you start with? Start by analyzing the question clearly. Start by analyzing the question clearly, not what you're given first. First, not what you're given, because you have to first know what are the assets in this question. What are the assets in this question? Then what are the costs you're going to capitalize in this question? What is the time of purchase? What is the time of disposal? What is the method of depreciation? So that is the reason why you need to first understand the question clearly. And you need to know, actually, when are you preparing your ledgers? We are interested for the year ended 2018, 2019, and 2020. So we start. They are telling us that this guy started a construction firm at the end of the what? At the end of 2017. That's when he started. The following information relates to non-current assets of the firm. On 1st January 2018, the date matters a lot, colleagues. The date matters a lot. On 1st January 2018, they are telling you that a grade G01 was acquired at this amount from China, and payment was made by what? By check. Acquired a grade. Which type? Because sometimes it is also good to know the type. It is G01. And the purchase cost? The purchase cost is how much? Purchase cost is shillings. Purchase cost is shillings. 200. This is the purchase cost. Then they are telling us that the payment was made by what? The payment was made by check. This is by check. Because you see on the required part, they said you also prepare bank account. So it will make sense. Next, they are telling you still on transaction 1, shipping and other transportation costs permitting to the grader where. Now, these are your shipping and other what? Shipping and other transportation costs. Also record what you have here. Because you have to make sure that, of course, this is not near you, you will incur this cost. You will incur this cost. So I also put it here. Still, it is on transaction number 1. For these numbers don't change a lot. Once you understand, you understand. These numbers, most of the time, they don't change a lot. The cost is how much? Transportation cost is how much? 42 million. Then next, they are telling us that what? Actually, they are telling us that while non-refundable taxes are freight and insurance costs were this. We also recorded this. It is shillings. How much? 51,580,000. That is non-refundable freight and insurance costs. Okay. Then still on transaction number 1. They are telling us the grade driver's wages and instructor training costs were this. So you have also this. Still on transaction number 1. Here we have not yet started answering. We are just noting what we are given. Are we together, colleagues? We are just noting down what we are given. Then we will analyze it.
Excuse me, guys. Good morning. I've just joined. I'm kindly asking you to guide me. Where are we?
We are on transaction number 1. We are analyzing what we are given in the transaction.
Which number?
Last question. Last question. Last question on transaction number 1.
Okay, thank you.
So for transaction number 1, actually, these are the costs that is there. These are the costs we have. Now, transaction number 2 is talking about another grade. Now, before you go to transaction number 2, we need to know what are the costs. What are the costs? What are the costs to be capitalized? What are the costs? Will all these costs be capitalized, or we have the cost that is revenue in nature? So, colleagues, my experts here, are we going to capitalize all these costs, or we have the cost that is revenue in nature?
Abel,
Yes.
I think we should capitalize it, because if you buy equipment, all costs you incur to put that equipment work are capitalized. That initial training for the instructor, for instance, if this grader is new in an organization and no one actually knows how to operate it, that initial training to make the grader work is capitalized. Then the subsequent trainings for other employees are the ones that will be expensed.
Yes. Who has another different view?
Yes, according to me, yes, we know that wages are usually expensed, but this time they have been combined with the inspector's training, with the instructor's training, of which what I know is that this person is trained once. You will never, like, you train him once and then he will always carry up the job forever. So according to me, I think we have to capitalize it, since it is like one-time expense.
Okay, because without that training, you cannot use actually this asset. So that training is helping you actually to understand how to use the asset. Then later on, other training costs you will be incurring will be expensed, but the initial training will always be capitalized. All these costs, I'm going to capitalize them. What is the cost you are going to base on when you're looking for depreciation? That's why we need costs to be capitalized. So as we determine depreciation for grade G01, we are going to base on this. We are going to base on this to look for the what? Depreciation. So we go to transaction number 2 now. Because once you interpret very well your transaction, doing the number is not hard. Doing the number is not hard. Transaction number 2. Transaction number 2, they are telling you that a new grader, now we have another grader, a new grader G02 was acquired on 1st May, date matters a lot. I thought you have the questions. A new grader G02 was acquired on 1st May 2019. at this amount. So I record this. I go back. I record this. I acquired this on first. On 1st May, I acquired this. First May 2019. I acquired another grader that is grader G02. You need to be knowing what are the assets in the question before you start answering. The purchase cost. The purchase cost is how much? Someone would tell me. It is 352.
540. 450.
Okay, that is the purchase cost. And that's always transaction number one. There is no any other information. So we go to transaction number 3. What is talking? What are they telling us on transaction number 3? Transaction number 3, they are saying, they are telling us that on 1st December 2019, the grader G01 was disposed of. So they sold this grader for this amount after it had developed serious mechanical problems. So we come here. We also note that on this date, we sold our grader 1. It matters a lot to know the time of disposal. It matters a lot. It matters a lot. 1st December 2019. Here we have disposal. This is disposal. For which grader, also to know which asset have you actually sold. This is grader 01, G01. And at how much?
158.
158 million. Perfect. Here we just purchased. Here also we just purchased. We acquired. Okay. Then the transaction number 4. Transaction 4. Transaction 4. Transaction 4. They are telling you that on 1st October 2020, management bought an office equipment. Do you agree that this is also an asset? Office building
Office.
is also.
Yes.
Yes, it's an asset.
Yes.
So on this date, they actually purchased office building. Here we purchased. Colleagues, don't look at this in terms of taxation. Look at this in terms of accounting. Okay? Tax experts here. Don't start thinking about IBD. No. And the amount is what? The amount is actually a purchase
9
cost.
million.
Purchase cost is actually 90 million. Then the next transaction. Now we are almost done. They are telling you transaction number 5, or not number 5. They are telling you that the firm's policy. Now they are telling you the firm's policy is to depreciate buildings at 5% using what?
Straight line method.
No,
Reducing
method.
balance.
Reducing balance. Hey, sorry.
For method of depreciation, transaction not number 5. Not number 5. Now they are giving you methods of method. They are giving you depreciation rate and the method of depreciation. And for office building, they are telling us that we have to use this. Perfect. Then next, graders at 20% using straight line basis. Okay. Okay. Then next, they are also telling you that the firm provides for full depreciation in the year of acquisition. That's where I started from. The firm provides for full depreciation in the year of acquisition. This is in the year of purchase, and none in the year of disposal. So we have the basis of what? The basis of depreciation. What should we base on, or which condition should we base on as we depreciate? Basis of depreciation. It is this one. So here it is not time apportionment. It is not time apportionment. Perfect. Next. All transactions were done through bank. All this is noted. This is you don't need to use cash account anywhere. All transactions were done through bank, and the firm's accounting period ends on what? So also this one matters. To know when the accounting period will end, because not every company or not every firm actually their accounting period ends on 31st December. Some ends on 30th April, some ends on 30th June. So it depends on the what? It depends on the actually. Here note number 6. Note number 6, they are actually telling us that the accounting period ends on. But in an exam, colleagues, we don't have time to do this. For you, you should be knowing actually some things in your head. Once you understand that this, you don't need to note this. It is time wasted. But here, because it is a discussion, I have to just write everything. Yeah? So our accounting period each year is going to be ending on 31st December. And all transactions are made through through bank. Perfect. Now we can start answering clearly because we have everything and the number becomes very easy. But colleagues, me when I am going to answer this question, I always start with what we call depreciation statement as my first working. Before I do anything, I always start with the depreciation statement. You know, all of us, we have the way we attack questions. We have different strategies, the way we answer questions. But this is the first strategy I use when I'm attacking this number. So you will allow me to first do a depreciation statement. And when you're doing the depreciation statement, you realize that at the end of it all, it is going to help you to make your life easier. It is going to help you to make your life easier, especially when you're answering Roman 2 and Roman 3. It is going to make your life easier. So with depreciation statement, what are you going to put? You're going to put your period, your year. Those writing, you first wait and understand this. You put your year, the first column, then the second column. Now you list all the assets. You create each asset, create the column for each asset. In the question, we have how many assets? We have grader 1, grader G01. Then we have another asset called grader G02. Then we have an asset called what? This is the first asset. We have this grader 1. We have grader 2. Then another asset is what? We have actually also this office building. So I also create column for office. Every person has the way you attack the number, but then last column I am going to put the total. So I am having, now they have told us, that each year is going to end. So our year of income starts on the first. I can create another column here. I can just write 20. The reason I want to emphasize, you're starting from 1st January. The first year is what? When you check the required part, the first year is ending on what? When you check on the required part, we need years ended 2018. So if it is for the year ended 2018, it means that this one started on what?
1st January
2018, and it is going to end on 31st December 2018. This is depreciation statement. What are you interested in? You want to know the reason why you are putting here this year. You want to know in this year, what was the total depreciation for this year? Because as we record the total depreciation. We don't record the depreciation of each asset. Here we are going to, when we are doing combined accumulated depreciation, it means that they need total depreciation for all assets. It means that they need total depreciation for all assets. Now, once we know the depreciation for this asset, depreciation for this asset, depreciation for this asset, it will be easier for us to know actually the total depreciation for this year. going forward, it will be easier. Now, we need to know what is depreciation for grade 01. What is depreciation for this? In the year 2018, what is depreciation for grade 1? And when you're looking for depreciation, of course, ask yourself, did you actually, you had this asset in this year of income or no? If you didn't have the asset in this year of income, it means that you cannot look for depreciation. So you ask yourself, when did you actually purchase the grade 1? So we go back at our transaction 1. We purchased our asset on first what? We purchased our asset on 1st January 2018, and we are dealing with 2018. The grade 1 was purchased, and the cost we are relying on to give depreciation is this one. This is the total capitalized cost. We are relying on this to give depreciation. And the basis of depreciation, give full depreciation in the year of acquisition. In the year of acquisition is 2018. So we are giving all what? We are giving the depreciation for the whole year. And the method we are using to depreciate graders is 20% using straight line basis. So as you get depreciation, it means that you're just going to get on your calculator, you get 0.2 or 20%, then you multiply by, because we are using this rate to depreciate graders. So you get 20%, me I am using 0.2, then you multiply by the cost. What is the cost of the grader? Grader 1. What is the total capitalized cost?
304.
Perfect. I don't know whether you have this value.
Yeah, that's what I have.
Please repeat.
We want depreciation for grader 1 in 2018. Remember, we purchased a grader 1. We purchased grader 1 in 2018, regardless of the date. Even if you purchase this grader, on 30th December, and you are using this method, full depreciation in the year of acquisition, you just get the percentage, which is 20%, then times the total cost. The total capitalized cost is this one for grader 1. So that's
Mr.
how what
Abel. Abel.
Yes, please.
What I'm asking for clarity. You're saying you don't consider depreciation in the year of purchase.
We give depreciation, full depreciation. We don't time a portion. We just calculate depreciation and we record that. That is the meaning of full year's depreciation. You give full depreciation.
Is this a tax policy, or it depends on the company policy?
It is the company's policy. And you see that on note number 5, they actually told you that when you check note number 5, they said the firm provides for full depreciation in the year of acquisition. It is here. It is not my own. No, it is not my own thing. It is here. They will have to give you the basis.
Okay. Then that's
okay. If they don't give you the basis, use time apportionment.
Okay. That's what I did. That's what I wanted to clarify.
Okay. Also, let's get depreciation for grader 2. To get depreciation for grader 2, before you just get depreciation, first ask yourself, did you actually have this grader in 2018? Because you may find that in 2018 we had this asset. So you go back and ask yourself, when did you actually acquire the asset? When did you actually purchase the asset? We purchased the asset in when?
May 2019.
So it means that in 2018, this asset was not there. We cannot give depreciation. It means that depreciation is 0. Even office building, Even office building was not there, isn't it? You see, office building, we actually purchased office building on first what? On 1st October. So we cannot give a depreciation here. Because in 2018, there was no office building. So what is total depreciation for 2018? You just sum up from here. You just add from here up to here. And that is total depreciation for 2018. You go to next now, 2019. In 2019, you ask yourself, you had this asset in 2019 or not?
It was,
Of course, as you asking yourself this question, you ask yourself, when did you actually sell your asset?
still 2019.
Out of these assets, which asset did you sell and on which date? So we go back and ask ourselves, you see they sold the asset on what? 1st December. This is grade 01. And we are dealing with what? 2019. And they sold the asset on 1st December. And here the company's policy is that they are telling you, you give depreciation, full depreciation in the year of acquisition and none in the year of what? Disposal. So for grade 1, what is the year of disposal? The year of disposal is actually 2019. And the condition they are telling you, don't give depreciation. Don't give none in the year of disposal. So it means that here we actually are not going to give any depreciation, because that is when we actually sold this grader. And the company's policy, don't give depreciation in the year of disposal. Is it clear, colleagues?
Yes.
Now, what if we were using time apportionment? Because I have my guys who will not attend another discussion. What if you were using time apportionment? How would you get the depreciation here? Because time apportionment, we consider the days you actually use the asset in that year of income. If you sold your asset on 1st December, then count from 1st January up to
30th November.
Up to 30th November.
That's 11 months out of 12.
So here it can be easier for you. Instead, if you realize that you're actually having the full month, if the date is not in the middle, you can use the month. It becomes easy. Because here the date is not in the middle, it is at the start. So it means that you used the asset in the whole of November. So we could just get 20% times the cost times this cost. But all we were using time apportionment, we get this cost. Because the colleagues we might not get another time. What is the cost? My cost has disappeared.
It's 352,450. 352,450.
But you can do it. Okay, someone tell me 352,450.
352,450.
Are you sure? Isn't it 304?
304, 130.
Right, that's
130. 130,000.
We use the capitalized cost. We don't use, we use this one. Eh?
Oh, sorry, I thought it was grader 2.
So we multiply by the number of days you actually
Why
used the asset. We multiply by the number of days you actually used the asset before you disposed of. So because here it is clear, we can just say 11 out of 12. Because it is clear. Unless if the date is in the middle. If the date is in the middle of the month, use actually days, don't use months here. That is if you're using time apportionment, but here we are not dealing with time apportionment. Okay, let's continue. Let's continue. Now we ask ourselves.
What do you mean when you say if the days are in? How do you know that the days within the month? Do they say that 6 May? Do they?
Yes, they can indicate that you acquired on 6 May. You acquired maybe on 18th December. Here you cannot use months. Unless if you're using full month depreciation. If you're not using full month depreciation and you're just using time apportionment, then you count days. You have to count days now. From 1st January up to this date. This date you don't calculate, you don't count it. Eh? The date on the actual date, you don't count it. Eh? Is it clear?
Yes, yes.
Okay, let's go back to our year of income 2019. In 2019, we had this grader or not?
We had it.
When was it? We purchased it on 1st May. So it means that we had this grader in 2019. However much you are purchasing it on 1st May, the condition is we give full what? Full year's depreciation in the year of purchase. We don't consider whether you purchased it on 1st May or 1st June or 1st October. Just give full year's depreciation. So it means that here you're going to get 20%. Then you multiply the capitalized cost of grader 2. And the cost of grader 2 is actually this one. Then in 2019, we had office equipment or not? When did we actually purchase office equipment? When did we acquire office?
2020.
2020.
So it means that in 2019, you cannot give depreciation for office building. So what is the total depreciation here? Total depreciation, you just get what you have here plus this plus this. Then we go to our last year. The question is, in 2020, do you still have this asset?
The first, no.
Do you still have grade 1?
No.
Because it was sold in 2019. So no depreciation here. No depreciation here because this asset was sold in 2019. So it means that in 2020 you don't have that asset and you cannot look for depreciation for that asset. What about grader 2? Do we still have grader 2?
Yes.
So give the same because we are using straight line for grader. For graders, we are using straight line. So if you're using a straight line basis, you just continue just getting 0.2 or 20% times the original cost of the grader. What is the original cost or what is the original capitalized cost? It is here. What about office building? Do we have office building in 2020?
Yeah.
Yes. And they are telling us with office building, we are using which method?
Reducing balance.
We are using reducing balance method. Where is it? It is here. It is here. We are using the reducing balance here. Method. But the percentage is what? 5%. So the fact that we don't have the previous depreciations, you're just going to get 0.5, 0.05, because 5% is 0.05, then you multiply. What is the capitalized cost for building?
90 million.
90. And that is your depreciation. Members, if they say reducing balance, you're getting rate to get depreciation using reducing balance.
Why did you put the 70 million blah 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 and then in the 2028 it was in 2019 for the grader too?
Kindly repeat your question.
The question is in the question paper it shows that the grader 2 was only in 2019 and then in 2020 you put the amount.
Yes, because if you purchased the grader 2 in 2019 and you have not yet sold it, it means that this farm or you are still having that asset. So if you're still having that asset, it means that you have also to go ahead and give the depreciation. Because you're going to use this grader in the next year. Here we didn't look for depreciation because this farm doesn't actually still own this. They sold it. They sold it. So you cannot look for depreciation on something you sold. Here you are still having the asset. You're still using the asset. So give a depreciation. Here we are acquiring the office building for the first time. So that's what you do. You just get the rate times the capitalized cost. But if we had previous depreciation, when you're using reducing, go ahead, please.
On the building, they said reducing balance. Aren't we supposed to subtract that 4.5 million from the 90 million?
No, because this is the first depreciation. Let me first record the formula. So this is the formula when you're using the reducing balance method. You get the depreciation rate times open bracket cost minus accumulated depreciation. So the question is, you're looking for depreciation of what? 2020. You're looking for depreciation. What is the rate? Tell me, someone who asked, tell me the rate. 5%, isn't it? Please, if you ask, leave your mic on. What is the cost of building?
The cost is 90.
The cost is 90. Now, the question is, do you have accumulated depreciation? Because accumulated depreciation means what? You add the depreciation for 2018, add depreciation for 2019. That is the meaning of accumulated depreciation. You add the previous part, the previous depreciation. But in 2018, no depreciation. In 2019, no depreciation. So it means that actually accumulated depreciation here is 0. So that is the reason why I'm having this value. Someone who asked, is it clear?
It's clear.
Again, please.
But what if we are going to look for, let's say, depreciation of 2021 for building here? It would be for 2021, depreciation would be this percent, 5% times the 90. You maintain the original cost, 90 million, minus, now what is total accumulated depreciation?
Minus 4.5.
0 plus this plus this. So you say minus this.
4.5.
That would be the depreciation for 2021. But if they say use straight line basis, we don't say cost minus accumulated depreciation. No, we just get rate times cost times the original cost. With straight line, you maintain the base. That is rate times the original cost, the original capitalized cost. You don't subtract accumulated depreciation. It's only and only when you're dealing with reducing balance that you can subtract accumulated depreciation. So let's continue. Let's see, continue. We are done actually. Here you are going to get the total, get this plus this plus this. And the answer is what?
74,990 million.
Perfect. Also get total here. This total is going to help us somewhere. Now you're looking for total for each asset. What is the accumulated depreciation for each asset? So you just sum up what you have for each column. Here it is accumulated depreciation for each asset. Here is total depreciation for the year. Total depreciation for the year. So if you drag, actually if you get this plus this, you must get this, as you can see. Hey, you don't get the same. Where is the problem? Hey, if you add total, the total here, the total here, but this total is not necessary, this one. So colleagues, I hope you have all this. And now once you have this, the life becomes very easy. The life becomes very easy. We start drawing our accounts. Any question before we start doing accounts? Any question, please ask. If you have not understood this, please ask. You have only this chance. Okay, let's see. Let's see. Let's now go to number 1. We are preparing combined non-current assets. Roman 1. What we are actually preparing, we are preparing combined non-current assets account. Don't rush. Don't rush. Kindly echo why we maintain the figure in the grader 2 in 2020. Because we are using straight line basis. For graders, we are using straight line basis. So it means that if you give depreciation here, 20% times the capitalized cost, you are going to do the same here. Because you are still having this asset here. You purchased this asset in 2019. You used the asset in 2019. That's why you're giving depreciation. You have not yet sold the asset. go ahead and give the depreciation 20% times the original cost. So here you can put debt, first column debt. You're going to first allow me once I do it will be easy. Here we are given to start with debt, details, then amount. Then on credit, debt, details, then amount. Remember, each account must be having a debit side and a credit side. So here I have shillings. I have also here shillings. Once I draw the first one, others will not waste time. We'll just be copying and pasting. Here you have debit. Here you have credit. So you can make that. You want to handle one by one. First, draw that.
What do you want to do? Hello?
Yes, please.
Sorry.
Okay. So colleagues, we first make this and we continue. Oh, you are done.
We are done.
Yes.
So here we are recording combined non-current assets. What are you recording? Here we are just recording the original costs. We are just recording the original capitalized costs. How much did you incur? How much did you incur when you were purchasing each asset? And you have to record each asset. So we need to know the first asset you purchased it when. For the year, because we are dealing with 2018, 2019, and 2020. So we have to handle from 2018 up to 2020. So for the first asset, we acquired it when? The first asset, we acquired it on 1st January 2018. What was that asset? Colleagues, don't keep quiet. You will sleep. Eh?
The first asset was the other one.
What is the name of the asset? Of course, when you're purchasing the asset, your bank account is losing. You need to know which account is gaining, which account is losing. Eh? Of course, when you purchase, your assets are increasing, and assets increase by debiting. So we put here cash account, rather bank account, and you specify which specific asset did you purchase. We purchased grader G01. At how much? We recorded the capitalized figure. This is the value you're going to record. So it means that when you open your bank account, you will credit it, but I want to handle one by one. I want to handle one by one so that we don't over confuse. Did we purchase any other asset in 2018? Colleagues, did we purchase any other asset in 2018?
No. No.
So if the answer is no, we close off this year. We can close off. We can close off. Close off means that you balance both sides. So what you have is only this figure. So I can just copy this figure and I paste it here. We are closing off. Do the same. Copy this figure and you just paste it in the other side. Then what will be your balancing? Your balancing on which date? The year is ending on 31st December 2018. And the balancing figure, you will call it balance carried what? Huh? Balance carried down. You like using what? FD.
D, because it's balanced, brought down.
So the balance, to balance this side, you just put this amount, because we have to balance this. So we are putting that. And I'm done with 2018. This is balancing figure. This is balancing figure. So it means that when you're starting 2019, for the year 2019, you're actually starting with this amount. You're starting with this amount. So this one on 1st January 2019, you have your balance. Balance what? Brought down. If you use D,
it's balance brought forward. Because you're getting it from 2018 to 2019.
Now copy this, bring it here. So here, did you purchase any other asset in 2019?
Yeah.
Which asset? No. On which date?
Graders G02.
On which date? So I record on 1st May. On 1st May, I actually acquired another grader. Remember, you are paying using what? Using check.
Bank.
So we put here bank account. Then this will be grader what? Grader 2. How much?
354,450,000.
Perfect. Did we sell any other asset? Did we purchase any other asset in this year?
No, but we disposed.
Now, if we disposed of what will happen is that now, it means that initially you had your assets are here on the debit side, and you want to reduce, you want to remove the asset you are selling from your records. You want to remove the asset you are selling from your record. Now, if you want to remove the asset you have on the debit side, we credit. Remember, we are recording only the amounts. So you're disposing of on which date?
On 1st December 2019.
1st December 2019. You're disposing of Now, if you're disposing of, it's like you're selling, the amount you get will go to disposal account. Because you have the what? You have the disposal account you are going to open. Which asset are you disposing of?
Grader G01.
And when you're handling the asset account, we don't record the disposal amount here when we are handling this. Because the reason is why we don't record the disposal amount, we are actually removing the asset in our records. So you record what was the value, what was the capitalized cost of grader 1. This is what we are actually removing. And the capitalized cost of grader 1 was actually how much? This one.
304,130,000.
So keep it in your mind that when you're dealing with asset when you're dealing with asset accounts, we maintain original capitalized costs, both on disposal and on acquisition. Because here you're just removing this asset from your record. You need to know what is the actual cost you have. We will record the disposal amount when we are handling disposal account. Do we have any other asset that we disposed of?
No.
So we can close off. Which side is higher? I think it is this one. I'll get the total. Also, I take this total, the other side. So it means that this side is not balancing. We have to get the balancing figure. And we are balancing off on which date? The last date of the year, 31st December 2019. The balancing figure is called what? Balance carried down. The difference between this and this. So we proceed to the next year. We proceed to the next year. The next year is 20 what? 2020. We are starting our year 1st January 2020 with which balance? With this balance. This is balance brought forward. You bring this figure here. Colleagues, these ones we have here are our balancing figures. These are our balancing figures, these ones. You're just balancing the side. Then in this year, did we purchase any other asset in this year?
Yes.
On which date?
1st October.
1st October 2020. We actually purchased, and we are using bank account. Which asset? Office building. Okay. The amount is how much? 90 million. The cost we were basing on to get depreciation. That's the cost you record here. Do we have any other asset that we purchased in 2020? The answer is no. Do we have any other asset that we sold in 2020? Colleagues, I'm talking to you.
We
No.
don't.
No.
So you just now just sum up. We balance our sides. This total, take it to the other side. Put it here. Then the balancing figure, you are balancing on which date? On 31st December 2020. And what you're putting here is actually balance carried down, and the balance is actually this. 442, 450. This is like the balance. If you're starting in 2021, this is the balance you will start with. But we are stopping here because the question they said we stop on 2020. So that's all about to combine the non-current assets account. Any question about this?
First scroll up, please.
I first scroll up. Here?
Okay.
Any question, colleagues? Because we are done, and that's all. For all questions you are going to be doing on depreciation, that's how you prepare combined non-current assets account. It doesn't change. The concept doesn't change. What can change are figures. Are figures and maybe your assets. Okay, are you done? Someone who is copying, are you done?
Yes, I'm done.
So we go to the next asset, rather next account. Which account? Number 2. Number 2, we are going to handle. I can just copy this. Which account are we doing? Combined accumulated depreciation account. So draw the format. Draw the format. And once you're done, let me know. Are you done?
Me, I'm done.
Yes, we are done.
Yes, Ebo.
So for this one, what we are going to do is talking about accumulated depreciation. So this is where our depreciation statement is going to help us a lot. Remember, accumulated depreciation account increases by crediting it. You increase accumulated depreciation account by crediting. The reason why you're crediting is that we normally debit depreciation, we normally debit depreciation account and credit accumulated, accumulated depreciation. The fact that you're trying to increase the depreciations, you keep on accumulating the depreciations you have in the previous years. But this depreciation for it, this one is just depreciation for 1 year. But this accumulated depreciation is depreciation for previous years, including the current year. So this one is for single year, this one combines all years. Okay. So what we will do is that and of course, colleagues, let me bring this again. When I'm doing, wait, when I'm debiting depreciation, it actually means that you're debiting profit, there is profit or loss account. Because we all know that if you debit profit or loss account, you're actually putting the item, or you're saying that the item is expense. If we are debiting profit or loss account, we are actually saying that that is an expense. But if we are crediting profit or loss account, that is actually an income. So that's why we cannot debit profit, we cannot credit profit or loss, because we know that depreciation appears in P&L as our expense. So what will happen is we start with our first year. Our first year, you ask yourself, which year are you dealing with? We want to know the depreciation. Want to know the depreciation for 2018. Rather, what is the first year? Is it 2018? Because we follow this rule, debit depreciation account, credit accumulated depreciation account. So in 2018, you closed your year of income. Because depreciation here, we are looking for the whole year. We are looking at the whole year. 31st December 2018. What was your total depreciation? That figure will go to PL. Here you can put PL, you can put depreciation account, whatever. PL account. This is like your depreciation. And what was our total depreciation for 2018? You go back at your statement. This is 2018. For the whole of 2018, what was the total depreciation? It is here. So you copy this and come and paste just this side. Put it here. And you're done. Then just ask yourself, in this year of income, did you sell anything? Did you sell any other asset?
No.
We didn't sell. Close off. Just close off. Close off this year. Then also the balancing figure. Your balancing was still on 31st December 2018. What is balance? What is balance carried down? It is still the same figure. We proceed to the next year, unless if there is a question. Here we are just copying the total depreciation for 2018. Here it is combining all depreciation for each asset. This figure must be combining depreciation for each asset. The fact that it is accumulated depreciation, this is the first depreciation we have. So what will happen is when you're starting another year of income, another year of income, when you're starting another year of income, on which date? 1st January 20 for 29. Okay, here I can just put 2019 to know that it help you when you're reading. Then when I'm starting this year, what was the value of accumulated depreciation? This is balance brought to forward, and it is this figure. You put it here. Then you ask yourself, in this year, in 2019, what was the total depreciation in 2019? So by 31st December 2019, what was the depreciation? What was the total depreciation in that year? You come here in your depreciation statement. This is 2019. From 1st January to this, the total depreciation is this. So you just copy this one and write it here. And this will go to profit oral, and it is your depreciate as a depreciation amount. So when you observe, it's like now your depreciation keeps on increasing. The first one you had this, now you have this. So it means that your depreciation are accumulating. But why didn't we start with 1st January in 2018? Where exactly? Because the depreciation normally comes in at the end of the year. That's when we record the depreciation. Here we are recording depreciation not at the start, but at the end. It's because we account for depreciation. Okay, Akatengo, I don't know whether it is your name. Thank you for replying here. Akatengo, that is your name. The fact that the reason why we are recording this, we record depreciation mostly at the end of the year. That's why I'm not putting here past year. This one is what you have at the start. But what was the depreciation at the end of the year for 2019? This is the one we have. So we ask ourselves, in this year of income, did we actually dispose of any asset?
Yes, we did.
Okay, now if you dispose of your asset, it means that now the accumulated depreciation also is going to reduce. It is going to reduce. And when you're reducing accumulated depreciation, this account is going to decrease. And for accumulated depreciation account to decrease, you debit. You come here, the fact that we are disposing of, so it means that we are removing the previous, the total depreciation for the asset. Now we come here. When are we disposing of that asset? On which date?
1st December 2019.
You must make sure that you're dealing with the years here. The years must be corresponding. Okay? The years must be corresponding. So on this date, we disposed of. So the figure will go to disposal account. So we are asking ourselves now, on this date, what was the accumulated depreciation? What was the total depreciation from the time you acquired, from the time you purchased an asset to the time you are disposing of? What is the total depreciation? Which asset are we disposing of? Grade
G01.
Perfect. And now, what are you going to record here? You will come here to your depreciation account statement. Now you consider what you have down. That is the reason why we created this. That is the reason why we created this. So it means that once you dispose of your asset, you are going to come here. It means that by the time you're disposing of your asset, this is the total depreciation for that asset. This is the total depreciation for that asset. Because we disposed of in 2019, you are seeing that in 2019, we didn't give depreciation. We didn't give depreciation in 2020. So we just copy this value. So that's how this depreciation statement is going to help you. It helps you to quickly pick the figure. This side, we are picking the total depreciation for the year. This side, we are picking total depreciation for the particular asset. Because the column represents the asset, not the years. So you come here and paste the value. Did we dispose of any other asset here? No, isn't it? So we just cross off. We just cross off which side is higher. Yes,
the
please.
disposal, the figure we've picked, I have not quite understood why we picked the depreciation of G01. Why?
For that very asset you're disposing of. So from the time of acquisition to the time of disposal, the total depreciation is actually this. Is it clear? You see, when you're copying values here, these values, they are not specifically to what asset. They are not corresponding to assets. They are just corresponding to years. This is just raw for years. And that this column is just helping you to know which figure can you put on accumulated depreciation on credit side. Then these values you have here helps you to know which figure can you put on the debit side of accumulated depreciation account if at all you dispose of an asset. These are the figures you pick as your total depreciation. Someone who asked, is it clear? Because we cannot copy this, we cannot pick this value again. However much this value is the same as this, but next time you may find that you have here depreciation for grader 2, you have depreciation for office equipment, and this value will change because here we are just getting this plus this plus this. But here you're actually adding depreciation for specific asset. That's why we base on this as we record this value. Is it clear, someone who asked?
Yes, it is.
Okay. If at all in 2019 we disposed of, rather if at all we are looking for total depreciation of grader 2 and we disposed of the asset in 20, we pick this. These ones correspond to each asset. Okay. So which side is higher? Let's put some speed. This session should end at least at around 12:30. What do you get? Yeah, the balancing figure, you're balancing off on 31st December 2023, rather 2019, sorry. And the balancing figure is balance carried down. What is the balance? This one minus this one. That's what I have. Then next, we are starting 2020 when we have the balance brought down, rather balance brought forward of this amount. Then we ask ourselves, in this year of income, what is total depreciation? That is 31st December 2020. So once you put balance brought forward, immediately ask yourself, what was the total depreciation for this year? Total depreciation, we are meaning for all assets. So you come here we are putting this one. Then we go back to our depreciation statement. The total depreciation for 2020, this one. This is 2020. Then the total depreciation is this one. So we pick this value. That's what.
Pardon?
You see here, we are starting this year with this as our accumulated depreciation. But remember, in this year 2020, there is also another depreciation. And this depreciation we are talking about combines depreciation for all other assets. So you come back here to your depreciation statement and you ask yourself, what is the total depreciation for 2020? 2020 is here. So what is total depreciation for 2020? It is this plus this, which gives you this. So this is the one you record. This is the one you record here. Are you okay now on this?
Yes.
Then ask yourself, do we have disposal in 2020? Do we have disposal? Do we dispose of any asset?
No.
If the answer is no, just balance off. Balance off your sides and get the total. The higher total is this, I put it here. Then I'm going to record this as 31st December 2020. What is the balance carried down? The balance carried down is actually here, 31st December 2020. The balance carried down is actually this, because I need that figure to balance this side. Any question? So if at all you're starting in 2021, this will be the balance to start with. Then you ask yourself in 2021, what is total depreciation? But here we are not interested in what? 2021.
Hey,
So that
Abel,
is,
how did you balance carried down in 2020?
this is wrong. This is wrong. It is one, it is actually this. So because we are just balancing the side. This one we had 0, so to balance this side, it is this figure minus 0 and we get this one. Is it okay now?
Yes.
So that's all about now, combined accumulated depreciation account. Any question? We go to the next account. Next account, number 3, second trust. That is disposal account. So you can also make another. So are you done with making the heading? Or the account, the account? Colleagues, don't forget to put debit side and credit side. Don't assume that the examiner knows. We have to put. It can make a difference where someone puts here a credit side and the debit side this side. You see, it can make a too much difference. So always indicate the right thing. Put here debit, put here credit. So the account we are preparing is not combined accumulated depreciation, but it is what?
Disposal
It is
account.
just
So of assets account.
disposal of assets account. Now with disposal account, reason why you're doing this is, are you making each year, are you making gain on disposal, or you're making loss on disposal? That is the reason why you are preparing this account. And you need to know that gain on the disposal is credited. This is credited to, you credit profit or loss. This is you debit. If you get loss on disposal, you debit your profit or loss, because loss on disposal, it's like an expense. Then gain on disposal, gain on disposal is an income. That's why we credit PM. And how do you know? How do you know that you have gain? For you to get gain on disposal, actually to get gain on disposal, it means that your consideration or the disposal amount is greater than net book value. Here we don't use tax return down value, tax experts here. Don't bring your taxation in accounting. Hey, here we use net book value. And net book value, you will see how we get it. Actually, net book value, as I said, net book value, where net book value, is equal to cost minus, this is original cost. Original capitalized cost. Original cost, then minus accumulated depreciation. That's how you get net book value. And you will realize that by the time we are doing disposal account, we have actually net book value. And you will be knowing, you will be having a consideration. So to get loss on disposal, where you find that consideration minus net book value, the answer is negative. That is loss on disposal. So we start. And when you're doing this, when you're doing disposal of assets account, just start from your first account. Come back here. This is our first account. Look for where you have the word disposal. Simple way, look for where you have the word disposal account. The first one is here, isn't it? So you just copy this. This is credit. This is credit. Now, what will you do in this? Colleagues, since by our audit become, people, you respond. This is on credit. We come here, we debit. But when you debit, you don't again record this word disposal, because already disposal is up. You ask yourself, what was the account? Where did you pick this information? The heading of that account is what? It is non-current assets. Non-current assets account. You can call it combined non-current asset account. Go back again. Go back here. This is the first year. This is the first year we have. In 2019, we have disposal. Now, as you pick this, also go to your, in the same year in 2019, go back at your combined accumulated depreciation. Look for where you have the word disposal in this account. Of course, we are dealing with 2019. You must work hand in hand. The years must be corresponding. Don't mix years. Here we picked the value for 2019. Also here you must be interested in 2019. And in 2019, ask yourself, in this account, do you have the word disposal account? And the answer is yes. And you see that it is on credit. So it means that I cannot, rather it is on debit. Here it is on debit. It means that I cannot debit again disposal account. I have credit disposal account. Since here it is on debit, I have to credit when I go to disposal account. So I pick this information, I come here, I paste, but I am going to remove this word disposal account because you cannot have here disposal and you again say disposal. No, you just write the corresponding account. What was the heading on the top where you picked this information? What?
Depreciation.
So it is accumulated depreciation account. Any question here? You just go to your asset account, look for where you have the word disposal account, then make the corresponding double entry. If it was on credit, on the asset account, now we debit. Now, do you realize at this point you have net book value?
Yes.
Do you actually agree that we have net book value?
Yeah.
Because when you observe, this is original cost, not original. This is original cost. And you can actually see that at this point, we have net book value. Because this is the original cost, this is accumulated depreciation for this very asset. So when you get this minus this, what you have is actually net book value. But we are going to put, we all know that disposal account is like revenue account. This is like revenue account, sales account. This is like revenue account. And we know that revenue account, once you sell, your account is going to do what? Do you credit? The revenue account increase by doing what? By debiting, crediting?
By crediting.
So it means that once we sell, here we are going to sell and we receive money. So the money you're receiving will go to what?
Credit, bank.
Will go to it. Your bank account will increase. Then your revenue account will also increase. That's why here I'm putting bank account, because now you're getting money. This is check. That's why I'm using
I beg your pardon.
Here I'm saying the fact that you're making disposal. You read note now. Note number 3 of the question. They said on 1st December 2019, the graded this number was disposed of was disposed of for this amount. So ask yourself, here it's like you're selling this asset. And when you make a sale, the corresponding accounts we open are, we debit either cash or bank, depending on the mode of payment. Then we credit sales account. And for our particular case, sales account is disposal accounts, is disposal of assets account. So we are crediting it. So when you're crediting it, you put a corresponding account, which is bank. Because here they told you all transactions were done through bank. When you check note number 6, all transactions were done through bank. So we don't record here. We don't record here cash. Instead, we are going to put bank. The money, the company is going to, the money will be deposited. And this is because you have sold grade G01. And you ask yourself, how much are you actually receiving? How much are we receiving on disposal?
108 million.
Someone who asked that, pardon, I don't know whether you clicked.
Yes.
Okay. Then on which date? On the same date. So we are asking ourselves, on this same date, on this very date, did you actually make gain on disposal or loss on disposal? That is our aim. So since that is the only disposal we have in 2019, we close off. We close off and ask ourselves, which side is higher? This one or this one? This side
The
or
debit
this side?
side.
So get the total. You can always leave like one space, or after no, it depends on which side is higher, because you may find that the balancing figure is here and you didn't leave the space. So the total is here, you copy this figure. You come back and paste it to this side. Remember, the balancing figure will not be balance carried down. No, the balancing figure is either gain on disposal or loss on disposal. So the question is, if you get this minus this, what you have is net book value. Now, your net book value actually, in simple terms, your gain or deposit is this figure minus net book value. But we are trying to merge everything at once. Just to get this minus this. But you colleagues, this figure is higher.
Yes, it is higher. I was also wondering. The balancing figure is on. The balance figure is on the credit side.
Members. Start with this side. We record the higher, the total, we record the higher total actually. We don't record, you have to make sure that you are serious here. So it means the question is here. Do you have gain on disposal or loss on disposal?
Loss on disposal.
Because when you check, like here, net book value, if you want to confirm actually that you have a loss or gain, net book value is how much? Get this. I can just get this minus this. The answer is net book value. Then consideration. If you want to confirm without hassle, the consideration is actually this. No.
It is 2.
The consideration is this 158. So the question is, come back at your scenario. You are saying to get gain on disposal, consideration must be higher than net book value. And we see that the net book value is actually higher than what? Consideration.
The consideration.
So it means that here you have loss
On disposal.
On disposal. Because if you get consideration minus net book value, you get negative. So you will come here. You will come here and put loss on disposal, but it will go to what? Profit or loss account. Remember, if you're debiting profit or loss account.
Abel, sorry for the distraction. Because how do you get the consideration?
Consideration is just the money, the disposal amount. How much did you receive when you were selling? You check note number 3. Note number 3. What did you actually receive on disposal? Have you seen?
Yes.
And still it is on the same date where you're getting the gain or loss. So what is the balance? Even if you get this minus the total of this plus this, you get the same. I think if you get this minus this, you get this. The difference is this. So, and that's always disposal account, because we only made one dispose. We only sold one asset. Even if the company is, even if the farm is not ours, we assume it is ours. Yeah? We sold it. So any question on disposal account? So we go to the last account. Last account is bank.
What do they mean?
Create, in your books, please create a bank account. Here you cannot say dispose of assets account. That loses the meaning. Eh? So you remove this. Are you done?
Yes.
So here you just ask yourself, What are the transactions you made through bank only? What are the transactions you made through bank? Come back here. Come back here to your account, the first account you prepared. Look for where you have the word bank. So it is on the debit side. Now we are going to do what? When we
Credit.
go to bank account, we credit. So just copy this. We come here, put this, but you remove this word bank account and we put what? Where did you pick this figure from? Which account?
Combined non-current asset account.
Here you can just use the very asset. Anyway, you can use combined non-current asset, but you specify which exactly, which you specify the very asset. In this year, did you purchase any other? Go back to your asset account. In this year, no. So you close off. You didn't make any sale. And if you realize that you also have a revenue expenditure, maybe you paid salaries and wages in the question, you have to make the corresponding account. Here, it doesn't mean that you focus on only non-current assets. No, any transaction that was made through bank, you record. If you paid salaries and wages, you record that bank account actually had to reduce. But here, so if we are closing this year, we are closing this year with this balance. With this balance. This is on 31st December 2018. This is balance carried down. When you're starting, another year, this will be fast. Because it is not a must that balance bank account actually must start with a debit balance. No, it depends on on the scenario you are handling. Okay? But we all know that bank account is an asset account and must have a debit balance. But there is a situation where you find that you actually have a credit balance. You cannot force debit balance when you're actually seeing that it is a credit balance. So on 1st January 2019, the balance brought down is actually this figure. So we ask ourselves in this year of income, we go back to our asset account. Here, no need of looking at accumulated depreciation account, no. Because here with accumulated depreciation account, just the asset is losing the value, but you are not losing the cash. You are not losing money. It's just the asset losing the value, not you spending depreciation. So that's why we focus here. In 2019, do we have a bank account? Yes. So we copy this, come here, you credit, but you remove this word and call it combined non-current asset account. Do we have any other asset that we acquired in this year? No. Do we have any other item we paid through check? No. Balance off. Just sum up the values for 2019. Then get the total. I don't know whether you are getting this total. Kindly repeat. Don't follow what I'm just writing here. So in this year, by 31st December 2019, you're closing with balance carried down of how much? It is actually this. Then in 2020, first January 2020, what is the balance brought down? You copy this. Then you ask yourself, in 2020, did you purchase any other asset? Come back at your asset account. Look for where you have bank account. It is on debit. We are going to credit. Here, put the word combined because that's you're picking this from combined non-current assets account. Then ask yourself, colleagues, ask yourself here, did you make any sale? Did you receive any money in 2020? Yes. Are you seeing here on disposal account? We have bank account on what? On credit. We have bank account on credit. So it means that when we go to our bank account, we will do what?
We shall debit.
Shall debit. Then you come here, you debit, but you remove this word bank account. You put what now? Which account are you going to put here?
Disposal.
Disposal account. Then you balance off. Which side is higher? Still this one. Add. So I'm
Excuse
putting
me,
that.
Abel.
Yes, please.
We made a disposal in 2019. How comes that we are putting it in 2020?
That is my mistake. We should actually record it in. That is my mistake. Thank you for observing that. It was what? It was actually what? 2019. So we bring it here in 2019. Thank you for that. 2019 disposal, it is here. Copy this value. And I have my colleagues who are just copying and pasting. Because I'm the driver. You should not accept the driver at take you to a place which is not your place. Should direct. So what is the balancing figure? So here we close at the 1st December 2019. We are closing this year with which balance? We get this minus this. So that is the balance we are going to start with in 2020. This is balance brought down, and the figure is just this. Then we ask ourselves, in 2020, did you actually purchase any asset, come back here to your combined non-current asset, 2020, you have this. So copy this, put it here, but remove the word bank account, put here combined non-current account. Then ask yourself, did you sell in 2020? Did we make any disposal? If you want to confirm, you come back at your disposal account. We only have 2019. So no need of just close off your accounts here. So that is your total. So here you're closing off 31st December 2020 with balance carried down of actually this figure. So that's all for this question.
A minute.
Any question? They may ask you to prepare profit or loss account, the extract of profit or loss account, or you prepare extract of balance sheet, financial position. Maybe I am going to talk about it in just 5 minutes. Then we close off. We know that this topic is done. You see, colleagues, the concept does not change. Whether you're doing which number, you just know. Just know that the concept does not change. What changes are just figures.
Abe,
Yes?
Abe,
Yes,
please,
please.
help me with the 1st January 2020, the 49,858. Where do you get it from?
This one. You mean this one?
Yes.
This is the balancing figure. You just get this total minus this. This minus this. Then you get the balancing figure. Are you all done with copying?
We're also understanding, not copying, just.
So any question? If you're done, you let me know. Colleagues, are you still on?
Yes.
Yes, we are.
Are you still understanding?
Oh, yes.
Let's see. Let's just first finalize because we have our Muslim guys have to first go. Then maybe they can say you prepare extract of profit or loss account. Extract of profit or loss account. So if you're preparing extract, it doesn't take a lot of time. Remember, this is an account. So what you just do, here you put profit or loss, account. Then you remove this. So we are preparing a profit or loss extract. This is just extract. You don't need to put also debt column. This is not necessary. This is not necessary. We all know when we are preparing profit or loss account, no need of putting dates. So just what you will do, maybe you can leave like here in 2018. What we put here, in 2018, you go back to your accumulated depreciation account, just copy where you see profit or loss account, where you see profit or loss account, you just copy. You just copy this. So it means here you have depreciation. This is like depreciation account. And that is the figure. You come here where we have combined accumulated depreciation, you copy this figure. Then you move, don't balance off, don't balance off. Then proceed to the next year. The next year you have this. Next year you have this. Copy the figure and put it here. This is also depreciation. This is for 2019. Then you go to the next where you have depreciation. It is here. You copy that, just this figure.
Excuse me, Ebo.
Yes, go ahead.
If we are still in 2019, would it be okay if we dealt with the loss on disposal as well in that year?
You can put it here on credit because, yes, before you proceed, if at all we had the loss on disposal, in 2019, bring it here. Loss on disposal. This is loss on disposal. Thank you. Loss on disposal. Just put the amount here. What was the loss on disposal? Is because we know loss on disposal, it is actually like an expense. What is the value? It is this one, eh? For you, you record it as positive. Eh? This is 2019. If authority was gain on disposal, you put here 2019, then write gain.
Disposal, loss on disposal is 8530 or something.
This is wrong, eh?
Yes, Habe,
8530.
yours, the one you posted has a formula in it. So when you're pasting, you paste special. Good.
So here in 2018, we have nothing. We have nothing. Here we have nothing. Don't put anything. Here in 2019, you have nothing. You don't need to record anything. This is just extract. Then 2020, you have nothing. So that's it. We go to 2020. 2020, do we have depreciation for 2020? Come back at your combined accumulated depreciation. 2020 it is this one. Then you write it here. So colleagues, that's all about extract. That's all about extract. Unless if there is question, but that's all about the extract. Any question? We go to extract of, that's today. Extract of balance. Extract of statement of financial position. Then we say as at.
Ebo,
Yes,
the
please.
depreciation of 2020, shouldn't it be 74,990?
Let me check. Combined depreciation 2020. This, eh? What did I copy? It is this one, eh?
Yes.
So in 2020, you have nothing also this side. Here we don't have any income. So extract, you know that with extract you need it depends on the question, but mostly they always specify. They can tell you maybe you do for the whole years from 2018 to 2020, or you do for the specific year. They can say for as at 31st December 2020. So we draw our extract. What you need is your details. Then what you also need is to know that your amounts are going to be in shillings. You create like 3 columns. Here you put cost. Here you put accumulated depreciation. Then here you put net book value. Then you list the assets you have, non-current assets. You list them. The assets you have as at this date. Do we still have grade 1 as at this date? Do we still have grade 1 as at this date? We have no grade 1. So here you don't put anything. Just you don't, just I'm putting it to know that here we have 0, we don't have anything there. Then while grade 2, as at this date, as at this date, as at this date, you go back here to your asset account, copy as at this date. What were the cost? What was, just tell me, what was the cost of grade 1? Colleagues, what was the cost of grade 2, sir? Colleagues, are you still on? Or after this one?
We are still on.
Oh, this one you know. This one?
Don't know.
For grade 2, actually the original cost was this. Then we ask ourselves, as at this date, what is depreciation for grade 2? As at this date, the depreciation for grade 2, you go to depreciation statement. As at this date, we have this. You just copy the figure you have. As at this date, what is accumulated depreciation for grade 2? You come here and copy this. If I told you we are dealing with grade 1, I copy this. So this side for office equipment, we have this. This is office equipment. This is office equipment. Office equipment, what was the original cost? What was the original cost for office equipment?
Was 90 million.
So finally getting net book value by getting this minus this. Then you get total non-current asset, because you see, as at this date, we don't have grade 1. No need of recording grade 1, because you disposed of that asset. Don't record it. So you add here, and that's all. That's the extract of the balance sheet. Maybe non-current asset. Non-current asset you don't have, you have actually current liability. You have current liability of bank overdraft. bank overdraft. You come to your bank account, because you see the reason why I'm calling it bank overdraft. We are closing. We closed this account. We are closing this account with a credit balance. The moment you find that bank has a credit balance, that is bank overdraft. If it has, and that becomes a liability. But if it has maybe a positive, rather a debit balance, that is your current asset. So you could just indicate the figure here. That's your extract. So colleagues, that's all. That's all for now. We can stop here. Unless if there is a question.
Abel,
Yes, please.
I have a question. It's just on the reducing balance method. When we were doing it for the office building, we just stuck to, after like subjecting it to the 5%, we left it there. So is that the depreciation for the, how come we didn't?
Your meaning here?
Yes.
You are breaking.
The building.
Kindly repeat the question. You're breaking off.
Okay, like they said, if when we're depreciating for the office building, we use 5% on a reducing balance. We just subjected the 5% to the 90 million. How come we didn't now deduct it from the 4.5 million from the 90 million? We just stopped at the 4.5.
Because that was your first. I explained this at start. You see, this was the first depreciation. This is the first depreciation. It means that accumulated depreciation in 2020, it is actually 0. So if you get cost minus accumulated depreciation, you're actually going to remain with the cost. I explained this at the start. Maybe I said if you're using reducing balance, you get rate times cost minus accumulated depreciation, isn't it? But remember, you're dealing with 2020. If you're dealing with 2020, what is the rate? What is the rate? The rate is 5%. 5%. Then you multiply the cost. The cost in 2020. What is the cost of this building? It was what? 90.
900.
Then you
90.
subtract accumulated depreciation. You see, at this point in 2020, when you see this is your 2020, before you write this figure, initially there is no depreciation here, there is no depreciation here. So it means that accumulated depreciation is actually 0. If at all we had depreciation here and here, you sum up to get accumulated depreciation. But here we don't have, as we are looking for accumulated for depreciation for 2020, for this one here, we don't have the previous depreciation. So here it becomes 0. Someone who has, is it now okay?
Yes, it is. Thank you.
But if you're doing that, let's say for 2021, it means that now you will be having some portion of accumulated depreciation, because we add the previous depreciations, all of them, to get accumulated depreciation. But don't be confused here. Here we just, our aim was to get totals. Total for grade 1, total for grade 2, total for office equipment. These ones are just totals. summing up this plus this plus this, this plus this plus this, this plus this. So, any other question? Is this discussion recorded? Because now I missed the last part of it. I think it will be shared. Colleagues, that's all. That's all for now. We can stop
Thank you.
here.
Thank you, Abel.
So that's all we can close off for now. We meet in the next time.
Abel, thank you.
Thank you, Abel. Please share your worksheet for us to.
Abel, when is the next discussion?
For me, just go through. But my main pointer here, that it indeed makes life a lot easier. Thank you very much.
When is the next discussion, Abel?
You look at the timetable.